Good evening. I'm Dan Fitzpatrick here at StockMarketMentor.com on Thursday, December 19th. I'm sticking with YRC Worldwide. Oh, at least one more day. That would be today. We'll see. Maybe over the weekend, but maybe not. And I'd suggest, if you're just new to this stuff, go back and check out my video here on this day, just to catch you up to speed. What I was really talking about was that this stock, after kind of blasting out of this little pattern here, big move up, and then on this day, looked to me like we could have an intraday reversal. Well, we did have an intraday reversal, but it looked to me like it could be really the mark of the end of this breakout, and we'd get more of a pullback. You'll note that on this big volume day, that was actually this day. So the following day, we had pretty big volume as well, not quite as big, but it was big, a reversal. And my suggestion was, you definitely want to get out of this stock, but the other thing is that when a stock does something that it's kind of like not supposed to do, that the kind of thing that it wouldn't just be you that guessed wrong, it would be some technical event, basically a pattern that should be a peak here, for example, and then move lower. If that pattern breaks down, if the stock doesn't do what it's quote supposed to do, then you need to take note of that and typically go the other way. So when the stock broke above here, you got to look at that and say, assuming you're trading this stock, you could just say, well, forget this, I'm going to move on. But I want to look at this chart because it's instructive for just about any other stock that you're going to trade. So now that the stock's made this, gap down and then traded up right away, what do we have? We've got a series of higher lows and higher highs. Volume heavier than average, on the decline a bit, but still heavier than average. I guess they got a refinancing deal, or the union workers voted to extend a contract, whatever, something like that. And so the stock is still being bought. I would imagine that a lot of this sell-off, not all of it, but a lot of this sell-off was due to the uncertainty. It's funny how when companies have a difficult time with financing and expenses, investors don't really like that. So the stock's been climbing up for a while, and my suggestion is you just stay long this stock, forget about the 200-day moving average, which is this line, simply because it hasn't really been that relevant. Now, with that said, you'll notice I'm not taking it off my screen, and the reason is because the 200-day moving average can become relevant at any time. Right now, that level is at 1621, so you could see the stock move right up to here and then start rolling over. Keep it on your screen, but don't look at it as anything significant until it says, hey, I'm significant. I would just stay long the stock, let it move. You don't know how far up the stock's going to go, but so far it's printing these higher intraday lows, higher intraday highs, closing up how many days in a row? 1, 2, 3, 4, 5, 6, 7. Let's go for lucky 8 tomorrow. Okay, members, over to the strategy session. What's working now?